What's up everyone, it's Gabby Trades here and welcome back to the channel. You've been loving the educational videos, so today we're doing another one. So let me clear up one of the biggest Fibonacci lies on trading YouTube. The golden pocket ratio is not between 0.382 and 0.618, and if you trade it like that, you're missing the real institutional zone. All right, you guys, let's start with a clean slate here. We're going to draw a little bit. So what you're going to be using for that is your simple fib tool. Okay, so the rule number one for the fib tool, and that's going to make your life so much easier. You're not going to be wondering whether you need to put one up or one down, or zero up or zero down. You always need to draw your fib tool from left to right. So whether that's in a bearish leg or in a bullish leg, you are going to draw it always from left to right. So that's rule number one. So when we look at phi, right, which is 1.618, that represents phi. So on the fib extension, that is going to come up as a extension. It's not going to be a retracement value. So when you invert actually 1.618, then you get 0.618. So what the traders get a lot wrong is that they will consider that the golden ratio is going to sit in between 0.382 to exactly 0.618. So that is what most traders will consider a golden zone. But in fact, that is wrong because the real retracement zone sits between 0.618 and 0.65. So all you need to do is just click on your settings and make sure you add that level in. And the way I did it is I made my yellow, so I know that that's my golden zone and the zone that the institutions are interested in. So that's where I combine all my other strategies, all my other entry strategies, and that's what you should be doing as well. You should be looking at this zone. So let's go and look at some examples on the chart. But like I said, first and most important is that you want to understand what is the trend that you're currently running in, right? This is what you want to know. And to make it easier, for example, to find your swing highs and swing lows, which by the way, I've done a video on it. It's very simple on how to read market structure. So make sure to check it out. It's also on my YouTube channel. But one thing you can use is, for example, my indicators if you don't have the fractal candles, but you can also get them for free, specifically the fractal candles. This is the 4-hour strategy indicator, but it has the fractals on every time frame. So with the fractals, you can very clearly see the legs on any time frame. So for example, we're in a downtrend over here. So if I look at this specific leg, I'll draw my fib extension always from the left to the right, correct? Left to right. That's rule number one. Okay. And in that extension that I'm drawing, I'm considering the wicks as well. And sometimes if you don't have one of the candles that doesn't have wicks, it doesn't matter. You are going to take the body of the one candle and the wick of the other. So that's just a rule for you. So over here, you can see clearly, this is our fractals. And then we've extended and look at the precision of this golden pocket touch over here where price rejected and then continued. 0.5 is the equilibrium of the price range, and that is using the Dow Theory. So that is also important, but I consider the 0.65 and 0.618 when I'm using the fib tool as a more helpful tool. So that is a bearish example down here. Okay, you can see the retracement very clearly. Let's look at another example. Oh, I think the current price action over here is good. Let's remove this so we don't get confused. So what do you have here? By the way, also one rule that's very important. We're going to look at this leg up here, right? Left to right, very simple. And where is our golden pocket? Down here, from which we retrace. A rule that I forgot to mention, which is very, very important, is in order for you to start drawing your leg, price should have extended at the very least to 0.236. I repeat, you don't have a valid leg until price have retraced and closed the body below 0.236, because if this leg was really strong and decided to continue up, it would usually reject around this area or 0.382. That's why I don't use it, but I don't even draw the leg if we don't get price retraced to 0.236. Just quick heads up, I'm running an exclusive promo with Bluffin right now. You can earn deposit bonuses just for funding your account and even bigger rewards based on your trading volume. These are different tiers, including whale bonuses if you guys trade size, but no matter what your account, there is free money on the table. The link is in the description box, and as a bonus, you also get access to my Discord if you sign up through it, and there I give my daily breakdowns and you have direct access to me as well. So here clearly we had a retracement, actually a massive sell-off, and now price is rejecting from where? From the golden pocket zone, correct? So now the interesting thing is you can actually stack these Fibonacci tools. So what do I have here? I have an entry zone, right? I have an entry zone down here from the pocket. Let's say I entered somewhere here. I put my stop loss nicely below, and then I target. Where do I target? That's the question, right? Let's say we're using only Fibonacci tools, we're not using anything else. Well, how am I gonna find my target up here? Well, I can use other strategies, but if I want to stack the Fibonacci tools, what am I going to do? Well, here we have another leg down, don't we? So here we're mapping the leg up, but we also have a leg down. Let's see if we can actually draw a fib tool on that leg as well. Let's delete it so you guys don't get confused. So again, from left to right, do we have a body close above 0.236? Yes, we do. So can we draw the leg? Absolutely. So what does that mean? Well, that means that our take profit should be in this area. Correct? So this is like a 1 to 2. Let's say if you don't have any other confluences and if you wish to stack just the Fibonacci tools in your favor, that's what you should be looking for. And it's really that simple, you guys. But always, you need to understand market structure. You need to understand whether you're trending up or down so you can expect the reversal points, right? And if you're really using the 0.65 and 0.618 as your golden pocket, you can also consider these as rotation points as well, which I refer to in the live streams a lot. So the real golden pocket actually sits in between 0.618 and 0.65. That's the zone institutions actually care about because that's where deep retracements meet real probability. Here's how to think about it in simple terms. If price only pulls back to 0.382, well, that's strength. It's not really the golden zone. If price pulls back into the 0.618 to 0.65 range, that is where you start watching for displacement, market structure shift, real entries, just so you can apply your strategy at that point. So that zone, it's really not magic, but you have to combine it with something from your strategy, whether it be liquidity, fair value gaps, structure. That's where trading will become precision and not hope. So just to lock it in, the golden pocket is between 0.618 and 0.65, not 0.382. And 1.618 is not a retracement, it's an extension based on phi. If this helped you, smash the like button, subscribe, and hit the small bell because I come live for New York session every Monday to Thursday each week. And also because I break down trading the way it should be thought without the fluff. Make sure to join the free Discord. The link is in the description. And if you're ready to take this to the next level with your education, make sure to check my trading course where I break down my trading system step by step. Thank you for being here, and I'll see you guys in the next one.